How to give a life insurance policy as a gift. While most life insurance policies are purchased by the policyholder, they can also be given as a gift. A life insurance policy protects the policyholder's dependents financially in the event that the policyholder dies. It accomplishes this by paying out a fixed sum to the policy's beneficiaries. Depending on the policy type, it can also be utilized for cash. While most life insurance policies are purchased by the policyholder, they can also be given as a gift. If you're looking for life insurance, either for yourself or as a present for someone else, obtain a free online pricing quote immediately so you know what to anticipate. How to give a life insurance policy as a gift. Here's what you should know about giving a life insurance policy as a holiday present. The advantages of having life insurance. You can name your spouse, partner, or children as beneficiaries on your life insurance policy. If you die while the policy is still in effect, your beneficiaries will get the payout. If you're undecided about purchasing life insurance, consider any family members who rely on your income. If you have little children or are the primary breadwinner for your family, a life insurance policy may be critical for your family's long-term financial stability. There are two forms of life insurance: whole life and term life. Whole life insurance policies are designed to cover you for the rest of your life. Premiums are frequently in the hundreds of dollars each month, but whole life policies typically include a cash value that grows over time. Because this cash value can be withdrawn or borrowed against, some policyholders use it as a backup emergency fund. Term life insurance policies are limited in duration, typically ranging from 10 to 30 years. These policies are far less expensive than whole life and can range between $20 and $50 per month for a healthy young adult. Period life premiums remain constant throughout the term. Your coverage will stop after the term expires. If you wish to keep your coverage, you'll need to get a new policy. There are various methods for providing life insurance. The manner in which you give a life insurance policy as a gift is determined on the sort of policy you wish to give. Life insurance in its entirety. If you already have a whole life insurance policy, you can transfer ownership to someone else. When the transfer is completed, that individual will have access to both the policy and the accrued cash value. They can remove money from that account for any reason. You can also continue to make payments on the insurance at that time so that the new owner is not concerned. Term life insurance policy. If you wish to get term life insurance for someone else, you must have them open a new policy while you pay the premiums. There is no method to open a term policy on behalf of someone else as a surprise. When applying for a term life insurance policy, you may be required to fill out a medical questionnaire including all of your previous surgeries, health issues, current and former prescriptions, and other information. You must also fill out a personal questionnaire explaining your interests. A medical exam may also be required by some insurance companies to verify your health status. You can set up term life insurance so that premiums are automatically withdrawn from your bank account. You can also send the insured a check for that amount. Just keep in mind that if you pay for someone else's insurance payments, you must file a form with the IRS detailing the overall gift amount. If you give more than $17,000 per person in 2023, you can request that the amount be taken from your lifetime donation limit of $12.92 million. The advantages of gifting a life insurance policy. Purchasing a term life insurance policy for someone will not provide you with any tax benefits. However, if you pay for an insurance that the other person would not be able to buy otherwise, you will be giving something priceless: peace of mind. If you transfer an entire policy to someone else, the policy's value is deducted from the overall estate value. For the exclusion to apply, the policy must have been transferred for at least 3 years. This technique will largely help wealthy persons concerned about estate taxes.